are joined by Ruchit Jain, who's the lead research of 5paisa.com, joining us today.
Well, yes, Ruchit, thanks so much for taking the time out to join us today. And let me ask you what your outlook is on the market, because we did have analysts who've come and told us that every time we make a new psychological high on the Nifty, and we did manage to cross 22,000 very recently, the market sees a correction. But a correction like this, well, this is something massive that has hit the streets today. So how are you reading this? Do you think this is temporary, or do you think this consolidation is going to continue going ahead?
Yes, hi, very good afternoon. Well, definitely you cannot anticipate a 2000 over 2000 points fall in the Bank Nifty index, when you are in an uptrend. But that's how the market behaves, usually when the crowd behavior is on the one side. So I think that this is the start of a corrective phase. We have seen a one-sided rally in last 4 to 5 months, and we have not seen any kind of price-wise corrective phases in this last 5 months of up move. Whatever corrections were there, they were small time-wise corrective phases after which the markets used to resume the uptrend. But since the momentum readings were quite overbought, we got a negative crossover today. So which is one of the signal that markets would enter some corrective phases in near term. There could be some stock specific price wise corrections as well, but on the index front, I think 21,450 to 21,500 would be the very crucial support range, because what we recently saw in the first week of January itself, markets went through some consolidation. It made a support base around that 21,450, and then we rallied about 22,000 mark. So if the market Nifty breaks the 21,450 mark, then I think that would be signs that we could see a further dips towards 21,000 or 20,800 in the near term. So we are a bit cautious for the near term. Of course, it's not a reversal of the trend. It's not the market has made any medium to long term top, but it's just a corrective phase which was much required after the overbought readings, and that's what we could see going ahead in the short term.
Right, Ruchit. Hi, Ankita joining in here. Like you mentioned, this is not the time for trend reversal, as we're speaking to analysts, and this is not really the time for trend reversal. But tell us, what are the pockets that are really exciting you right now? What are the counters that one should be holding in this market? What are your picks?
Yeah, hi Ankita. So I have a couple of recommendations. So we would be more long on some defensive spaces, maybe selective pharma and selective FMCG could relatively do well compared to the markets. So within the pharma space, Lupin is one of my trading recommendations for short to medium term, where I think the high top, high bottom structure is still intact. We have seen that the stock is still trading above its 20 DMA support. And today, in spite of the corrective phase in the markets, the stock has managed to do quite well relatively. So I think this is one stock which would continue to trend higher. One can go long over here with stop below 1360, expecting targets around 1460. And I think banking would see some corrections. We have already seen some private sector banks correcting today. I think in the short term, some PSU names could also see a corrective phase. So Bank of Baroda within that space would be one stock where we are recommending to go short on. So ideally, a low top formation has been seen today. So low top, low bottom, in case if sees, then there could be some dip towards 218 kind of levels. So one can go short on Bank of Baroda, keeping stop loss about 231 for potential near-term targets around 280.
Thanks so much for taking the time out and joining us today.